Assalamu alaikum. The story that's been gripping the financial markets recently has been that of the Reddit page WallStreetBets and their effect on heavily shorted stocks like GameStop and AMC. In this video, we're going to cover what the heck is happening and how did we get here, and I'm going to provide my commentary on the latest events. So we'll start with what is happening, and we'll look at the case of GameStop, ticker symbol GME. Here's a stock that was trading at around $20 at the beginning of the year, and as of the date of this recording is trading above $400 per share, so close to a 20 times increase in less than a month. So what is behind this meteoric rise? Are people suddenly going out of their houses to physical stores to rent their video games? Did GameStop convert all of its cash reserves into Bitcoin? No, in fact, what is happening is a short squeeze on steroids. So to understand what a short squeeze is, basically in the case of GameStop, a lot of people, let's call them the suits, were betting that the GameStop stock was going to go down in price. These suits were so sure that GameStop was going to go down in price that they actually borrowed shares of GameStop and they sold them. They sold their borrowed shares in hopes that they would be able to buy those shares back at a lower price. This act of selling borrowed shares is known as short selling. And now, how many shares of GameStop did these suits borrow and sell? Well, roughly 140% of them. Basically, it's a huge cluster French toast of gambling and creating risk that the financial markets have normalized. Now, I've explained why I think short selling is haram in a previous video. Link to that video in the description if you're interested. The bottom line is that short sellers lose money when the stock that they sold short goes up in price. This is because eventually the short sellers have to buy back the shares that they borrowed and sold in order to return them to whoever lent them those shares. Now, when do short sellers have to cover their positions? Basically, return the shares that they borrowed to the party that lent them these shares? Well, brokers require collateral from short sellers. This is often referred to as margin. When the share price is going up, short sellers have to either add more money to the collateral that they have with the broker, or they have to buy back the shares that they sold for whatever they're trading at on the market and eat the loss, basically. Now, when short sellers are forced to take the loss, cover their position, and buy the stock on the market for whatever it's trading at the time, they're creating demand for the stock, which is going to raise the price of the stock even more. Now, this is what is called a short squeeze. So when you have a stock that is shorted at a rate of 140% of float, you basically have a powder keg that is ready to explode upwards if the stock price moves upward a bit. And so the good people at WallStreetBets noticed that there was this powder keg that was laying on the floor of the financial markets ready to explode, and they decided to get together and blow it up by buying shares of the stock and pushing the price of the stock higher. As a result, the price indeed went higher. Some short sellers were forced to cover their position, which pushed the price even higher, which made it an even more attractive target for short sellers. So additional short sellers came in. And so the battle between basically retail investors trying to push the price up and short sellers trying to push the price down commenced and is still raging on. So some thoughts on what is happening. First, short sellers get very little sympathy from me. Why? Because short sellers are essentially trying to drive the companies that they short out of business. When they borrow shares and sell them, they are creating fraudulent selling pressure that is driving the prices of these stocks that they're shorting down even further. And I say it's fraudulent selling pressure because this selling pressure is not coming from owners of the stock. The owners of the stock aren't selling it. Rather, this pressure is coming from people who borrowed the stock and shouldn't be able to sell it in the first place. But they are selling it, and it's driving the price of these companies down. So actually, short selling is market manipulation. It's the textbook definition of market manipulation. And just because something is legal doesn't make it ethical. The way that short sellers make the most money is if the company that they're shorting goes out of business. So short sellers really shouldn't expect much sympathy when they are trying to put companies out of business if someone comes along and tries to put them out of business. Second, there is no rule, ethical or legal, that says that you should only buy a stock or a company based on its fundamentals or based on its projected future cash flows. Many people, since the dawn of time, buy things in order to support a cause, not necessarily motivated by financial reasons. So I don't think that it's accurate to say that if you're buying a stock to support a cause, that this is necessarily market manipulation. The fact of the matter is, people are tired of hedge funds manipulating the financial markets by doing things like shorting a stock to the point it's shorted 140% of the available stocks in circulation. They're tired of these practices and they want to reclaim, to an extent, the financial markets for the average investor. I totally understand this sentiment. What is market manipulation is if you create fake selling pressure for a stock by selling stocks that you borrowed. This is market manipulation, and this is what happens in short selling, as I mentioned. Frankly speaking, I think over the long run, what is happening is a positive because hedge funds are now not going to feel as free as they used to when it comes to shorting stocks. They're going to start thinking that, hey, if we overshort this stock, then some online community may notice this and they may do to us what they did to the shorters of GameStop. Third, I am not invested in any of these meme stocks, nor do I plan on it, nor do I think that they are necessarily a good way to invest if your intention is making money. If you're investing because you think there's a social good here, then that's fine so long as the stock itself is halal to buy and own. Just know that trying to predict the psychology of masses and what they're going to do next is a rather tricky business, and this thing could fall just as fast as it went up. The first rule of investing is not to lose your money, and never lose sight of that. If you want to buy stocks where I buy stocks and you live in the United States and you'd like to support the channel, use the link in the description and sign up to M1 Finance. Like and subscribe, make sure to take care of yourself and stay safe. Assalamu alaikum and peace be upon you all.